Exploring the variables influencing fruit pricing dynamics globally. Fruit pricing dynamics are an intricate web of interconnected influences that extend beyond mere supply and demand. This invisible network operates at various levels, from local weather conditions impacting the harvest to global geopolitical decisions that determine trade policies. In this ever-changing world, understanding the complexities of fruit pricing dynamics is no simple feat, yet it is crucial for a myriad of stakeholders, including farmers, investors, and consumers. For farmers, comprehending these dynamics can help optimize production strategies, ultimately maximizing profitability. For investors, this understanding provides insight into the potential risks and returns in the agricultural sector, particularly in fruit production. Meanwhile, for consumers, it shines a light on the fluctuating prices they encounter at the grocery store. Regardless of one's role in this complex network, possessing a solid understanding of fruit pricing dynamics is undeniably valuable. Factors influencing fruit pricing. Fruit pricing is a multifaceted concept influenced by a multitude of factors, each playing a unique role in determining the cost consumers ultimately pay. In its simplest form, fruit pricing is a function of supply and demand. However, the reality is far more complicated as this balance is continuously swayed by various elements. These range from tangible factors, like the cost of production and labor, to the intangible, such as consumer preferences and market trends. Additionally, external influences, like weather conditions and global trade policies, can also exert significant pressure on fruit pricing. Top 10 variables impacting fruit prices. 1. Quality and varieties of fruit. The type and quality of fruit play a significant role in pricing. Premium, exotic, or organically grown fruits often command higher prices due to their perceived superior quality and the costs associated with their production. 2. Cost of production. The expenses incurred in producing fruits, including the cost of seeds, fertilizers, and pesticides, can significantly impact the final pricing. Additionally, costs associated with harvesting, packaging, and storage also feed into the final price. 3. Labor costs. Labor constitutes a significant portion of the cost of production. Higher wages, driven by socioeconomic factors or legislation, can lead to increased fruit prices. 4. Supply and demand. Basic economic principles apply to fruit pricing. When supply exceeds demand, prices tend to fall and vice versa. These fluctuations are often seasonally influenced. 5. Seasonal factors. Fruits are seasonal commodities. Their availability throughout the year can impact prices, with scarcity during off-season periods often leading to higher prices. 6. Climate and weather conditions. Adverse weather conditions like droughts, floods, or unseasonal temperatures can affect harvests, disrupting the supply chain, and influencing fruit prices. 7. Global trade policies. Import and export tariffs, quotas, and trade agreements between countries can affect the cost and availability of fruits, impacting their pricing. 8. Exchange rates. Fluctuating exchange rates can influence the cost of imported fruits, which, in turn, can affect their pricing in local markets. 9. Transport and logistic costs. The cost of transporting fruits from farms to markets is a crucial component of fruit pricing. Any increase in fuel prices or logistic costs can translate into higher fruit prices. 10. Market competition. The level of competition among growers, distributors, and retailers can influence fruit pricing. Greater competition often leads to lower prices as businesses strive to attract consumers. Navigating the complexities of fruit pricing. Understanding and navigating the complexities of fruit pricing can seem like a daunting task. However, with the right knowledge and resources, one can successfully chart a course through this intricate landscape. Understanding the market and consumer behavior. A fundamental step is to understand the market's dynamics and consumer behavior. Researching trends, studying market reports, and staying updated with consumer preferences can provide valuable insights. Factors such as changing dietary habits, health consciousness, and increasing demand for organic or exotic fruits are important considerations. Keeping track of global trade policies and exchange rates. Monitoring international trade policies and exchange rates can also be instrumental in understanding fruit pricing. Global events, shifting political landscapes, and international trade agreements can significantly impact costs. Moreover, exchange rates play a vital role in import-export dynamics, thus influencing pricing for imported fruits. Dealing with unexpected changes. The ability to adapt quickly to unexpected changes is a valuable skill in navigating fruit pricing. These changes can range from unpredictable weather patterns that affect harvests to global events like pandemics, which can disrupt supply chains. It's essential to have contingency plans in place to mitigate the impact of such unforeseen situations. Investing in technology for better yield and cost control. Leveraging technology can also help navigate fruit pricing complexities. Technological advancements such as precision agriculture, automated harvesting, and blockchain for supply chain transparency can increase yield and reduce costs, contributing to more predictable pricing. The future of fruit pricing in the global market. As we look towards the future of fruit pricing in the global market, several key trends and shifts come into focus. These are not only likely to influence the way we approach fruit pricing but also have far-reaching implications for the broader agricultural industry. Predicted trends and shifts in the fruit market. It is expected that consumer demand for transparency, sustainability, and organic produce will continue to grow, potentially driving up prices for these products. The shift towards local consumption trends, in an attempt to reduce carbon footprints, might also reshape fruit pricing, emphasizing the value of locally grown produce. How technology and climate change might influence fruit pricing. Climate change, with its unpredictable weather patterns, is posing new challenges that might impact fruit pricing. However, the adoption of technology could provide a buffer against these changes. From climate-resistant crop varieties to advanced forecasting models, technology might help us manage and predict pricing with greater accuracy. The role of sustainable and local farming in future fruit pricing. As sustainability becomes an increasing consumer priority, the emphasis on sustainable and local farming practices will likely grow. This shift could influence fruit pricing in several ways. While sustainable practices might initially increase costs due to the investment required, they could also lead to long-term cost reductions through improved resource management. Moreover, as consumer willingness to pay for sustainable products increases, this could also be reflected in fruit pricing. Navigating these trends and shifts will require not only a keen understanding of the current landscape but also the ability to anticipate and adapt to future changes. It is clear that the complexities of fruit pricing will continue to evolve, and staying ahead of these changes will be essential for all stakeholders in the agricultural sector. In conclusion, fruit pricing is a complex mechanism influenced by an array of factors, ranging from the tangible costs of production to the more unpredictable elements such as climate change and global events. For stakeholders, understanding these dynamics is vital to navigate the challenges and opportunities presented by this landscape. The role of technology in enhancing agricultural productivity, the impact of global trade policies, and the influence of consumer preferences and market trends all play a significant part in determining fruit prices. Moreover, the future of fruit pricing is likely to be shaped by sustainability trends, advancements in technology, and ongoing climate change. Given the intricate and dynamic nature of these factors, continuous monitoring and adaptation are crucial. As we move towards the future, staying informed and adaptable will be key to navigating the world of fruit pricing. Through such understanding and flexibility, farmers, investors, and consumers alike can better position themselves in this complex, ever-evolving marketplace. Thanks for watching.